today's episode. So, Happy New Year and welcome to the blessed year. I pray that this year is our year of breakthrough and great testimony. So, today, what I'm going to do basically is to clear all my charts. I'm going to clear all the charts and I will have to start all over again, start from top down analysis. So I'm starting with this, with what I'm currently on. I'm going to clear everything as if I've never done anything on it before. So that's what I'm going to do for all the pairs I have here. And also I'm trying to okay. I'm trying um to be selective in terms of the pair that I receive. But nevertheless, every day is made for improvement. Yeah. So I'm going to clear all the shots. Starting all over again. Trying to clear everything, trying to clear all the shots. Like we actually take a lot of time, and it will be a kind of. So I think I can start finding an interest in gold. So let's see what I can actually put on gold. So yeah, this is the daily time frame for gold. Wow, wow. Looking at this, although normally looking at this is exactly what I can actually spot. Like the moment I switch to daily time frame, this is what I can spot on gold. One, that's one, but I still have this. Okay, if I do, let's do this one. This is what I can spot on gold. This is what I can spot on gold. So let me just delete this. So now this is daily time frame and I have this area here. Okay, we have this. This is the last eye on the daily time frame. The last eye on the time frame. And we have this low being broken. This is daily time frame. I'm just doing my top down analysis. I want to understand the actual movement. But before being broken, let's actually expect a demand zone so after getting that demand zone, we have demand turn supply. So we have this supply zone here. So now we have that supply zone. So we have demand turn supply and before point and we have this break of structure here. So I want it to be straight. We have that break of structure and we have this engineered liquidity. We have that engineered liquidity. So looking at this, my bias on the daily time frame is bearish. It's actually bearish. I'm still looking for opportunity for price to actually drop. Yeah. So my first target is my first target on gold is this is my first target. Okay, I'm still targeting now. So let's go to 4 hours time frame to go and check. This is 4 hours time frame. On this 4 hours time frame, do we have a complete mitigation? No, we don't have a complete mitigation. So we still have that FUG there on 4 hours time frame. Okay, let me still go to 2 hours time frame. Okay, 1 hour time frame. This is 1 hour time frame. So within this 1 hour time frame, I still have this particular area available. And come to see it, let me delete it so that you can see what I'm looking at here or what I can spot here. This particular candle actually took out a liquidity here. So that's why I'm considering it. And this will be the last place I'm going to have my refinement. So you have this particular area here too. So that's it. Now, although this liquidity has been grabbed, that liquidity has been grabbed, and this is the final target, like my main target for this. So I'm still looking at this. If price should actually take out, like if it happens that price should take out this R, if price should take out that R, if price should take out this high, then I'll be looking for opportunity to actually to sell down to this target, this particular target here. That's what I will be looking out for. So that my bias is bearish, but I don't have a complete mitigation on daily time frame. So that's why um I'm like, as you can see, we have this two eyes here, and we have another eye here too. This is a 4 hours time frame, and price came down to take out this low, to take out that low and come from for a proper mitigation around here. Yeah. So the first target is actually this area. The first target is here. I'm still looking at it. If price should take out this high, then I'm looking for opportunity even without waiting for any confirmation. Opportunity to pick a sell from here in that area, putting the stop loss just here and targeting this low. That would be my bias. If price should move from this and take out this high, then I'll be looking for opportunity to sell from that area and target this. Even though I'm still targeting low, 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 low. So this is my bias on gold. For now, this I will be taking out, and there's still unmitigated zone here too. So this particular eye only serve as um only serve this particular eye only serve as engineered liquidity towards that POI, towards that POI, and we have this internal BOS here. So now what price can actually do? Price can be like, okay, price can do something like this since the market is bearish, can do something like this and continue. Yeah, price can actually do something like this. The reason is that on for price to actually take out this particular inducement and mitigate daily time frame structure, or mitigate daily time frame supply zone after inducing that high, and this is the daily time frame target. So there is tendency for price to actually continue the order flow, the buyers towards the external liquidity to be taken out. So if this area that I mark out should fail, if this area should fail, I'll be looking for opportunity to target this particular eye and waiting for a sell, proper sell, complete mitigation from this area. That's my bias on gold. Okay, let me go to Euro USD. So this is the daily time frame. If you look at this, just take a look. This daily time frame and look at this. It is a continuation pattern. You can see bearish. This is bearish. Okay, so this is it on daily time frame. We have this break of structure here. So after the break of structure, we have this engineered liquidity. Yeah, we have that engineered liquidity. That's the liquidity, and we have this. As you can see, there's still an average above that high, and price actually came into this zone for proper for mitigation. And this low, the final target, the external liquidity has already been taken out. So this is bearish, as you can see. The engineered liquidity was taken out and price mitigate the supply zone. And even before the what is it called? The downward move, before the drop, we have this being taken out. It also took out a liquidity and boom, we have that massive drop. So looking at this, we have a mitigation here. Price mitigate that supply zone, and we have this break. We have this break, and above this high, there's an FEG here between here and there. We have this FEG. There's an FEG, and here too, we have this liquidity. We have this liquidity being taken out, liquidity grab here, and we have this mitigation as well. And after that, we have this what is it called? This external liquidity available to be taken out. We have that external liquidity available to be taken out. There is this internal break of structure here. And based on price action, we have this bottom, double bottom there. But are we going to say price is ready to reverse upward? Let's wait and see. To confirm this, if price is actually ready to reverse upward, using this double bottom, I'll be expecting this to happen. If this should happen, then I'll be having a kind of change in bias. Okay. Mm-hmm. We have this. We have that trend line. Yeah. Mm-hmm. Yeah, that's a series of touches. So if price should, like we have that double bottom there, if price should break that trend line, then what I'll be looking out for will be that there is tendency for price to actually come to somewhere around here for me using SMC and my understanding about the market actually. So I'll be looking for opportunity that okay, there's tendency for price to actually come around there. Although for price to actually break this kind of trend line on a daily time frame, it will mean a strong reversal. Yes, it will mean a strong reversal. And let's take a look at where price is actually coming from. Here we have that particular rejection. This is daily time frame. We have this break of structure here, followed by another break of structure, followed by another break of structure. Okay, so we have this unmitigated zone. Yeah, and you see, and before that particular zone is this inducement. Yeah, we have this inducement before that particular zone. We have that inducement, and after the mitigation of that area, you will see that price, that was the last break of structure we have, and there is this mitigation. We have these two candle coming together, which is a supply zone. When we have two weeks coming together, that's an interlock. This is a supply zone. Price already mitigates that supply zone before we have this break of structure. And when price returned to this area too, this particular zone too, to this area here, we already have a mitigation as well. And after that mitigation, that supply zone failed, and it failed, and price actually came back into this rejection zone or week, and that's exactly where price is currently reacting to. So in this kind of scenario, for me, this is on daily time frame. This is on daily time frame. Price is coming from a demand zone. Currently, it has taken out the liquidity. This taking out that inducement. Then within that demand zone we are currently, price based on price action. I'm not talking in terms of SMC now. I'm talking in terms of um chart pattern and price action. We have this double bottom, and double bottom usually indicates signal a reversal, and we have this daily time frame trend line. So if there should be a break of this daily time frame trend line as a result of this double bottom, mind you, price is currently in the demand zone. So if there should be a break, a closure above this demand zone, let's say on 4 hours time frame, then I'll be looking for opportunity to actually have a long sell. That is what I'll be looking out for. No, that is what I'll be looking out for. Even though my target may be this last point of like somewhere around yeah, yeah, or yeah. Those areas will be my target. Price has already like we already have this break of structure here. We already have the break of structure here. So I'll be targeting somewhere around here or here. So even it will be here. Then I'll be looking for if I should get to that area, then I'll be looking for another to get here. Then targeting this low again. This is actually the buyers I have on Euro USD. So let me check the 4 hours time frame to see. Okay, this is 4 hours time frame. This is 4 hours time frame. So let me point out something on this 4 hours time frame. Nice one. We have this liquidity gap here. You can see liquidity graph. After that liquidity graph, we have this I being taken out. After taking out that I, we also have these two being taken out. So we have two BOS for me. Then we have this engineered liquidity as well. This weak zone is available as our demand zone, but I'm going to go um to the lower time frame to see what is actually going on within that area. You can see that red candle on 30 minutes. Nice one. That's the rejection block. Okay, 65. Okay, okay. Let's see. Equal. Okay. That particular low, there is equal lows there. So even on 4 hours time frame, besides the fact that we have on daily time frame we have this double bottom. Even on low on 2 hours, 4 hours, we have a clear support level. You can see first touch, second touch, third touch, fourth touch. So that's a strong support level on lower time frame. So I'm expecting more rally. Although there is November 22. Let me go to November 22. Okay, 16-week zone. So I can't actually see. Okay, so we have this support level on lower time frame. So on daily time frame, if we have a week, even 4 hours time frame, if price should actually break this particular trend line, then it means that we'll be expecting more rally from this Euro USD. So the top-down analysis is what actually informed my decision regarding this. If not for that, I would have been looking for something else. So with this, I have a clearer picture of what price is actually doing, understanding where price is coming from, where price is currently, and putting everything together to understand the buyers. So we already have a double bottom here on daily time frame. We already have a double bottom on daily time frame, as you can see. So if there should be a break of this particular trend line, the daily time frame trend line, a break of it and with a closure above that break, then we'll be expecting more rally from this particular pay. Where is coming from the demand zone? This is the demand zone on daily time frame. and unmitigated zone. After taking out the liquidity, we have mitigation of the demand zone and we have another demand zone presently, and that's exactly where price is presently. So if there should be a break and a closure above this, a bullish moment break of this trend and we have price closing above it, then we can actually expect more rally from euro USD from euro USD. So good, just like what do we have on gold? I'm still expecting a bearish move on gold. Yeah, but presently, okay, and as far as getting to that zone, just like I said that we can have two reactions here. Price already took out this low and this is the next low to be taken out. That's just it. Okay, which other play? Okay, let me do um odd JPY. I think that's where I'm going to stop for today. I think that's where I'm going to stop for today. And that doesn't mean that I'm not going to take my like entire day trade. So I'm going to explain how the entire day trade will be taken if I can see either on mitigation and we take it from there. Looking at this is bullish, right? As you can see, the price is actually okay. So for this indicator, okay, we have this IRI. Okay, let me just now look at this. This I was broken. There's a break of structure here. You can see that break of structure. And let me use Fibonacci. Can you see this? That's the break of structure, and we have Fibonacci, which means that price has already retraced to the 0.76 Fibonacci level of the whole range. So what are we expecting? Can you see? And price now invalidates that demand zone. Yes. So for price to respect that demand zone around that area, then and let's take a look at this. Around September, we have this internal structure, this I being taken out. Okay, this demand zone, this base, as you can see, supply zone order, that base was invalidated. Okay, demand to get. So right now we have this. Okay, we have this strange candle here, which is actually a demand zone, and it was created as a result of mitigating this supply zone. That state can do as well, which is the supply zone, and that's supply turns to demand. It means that there is a transfer of money between the from the supplier to the buyers around this area, and that's exactly where price actually is expected. And so after that, we have this liquidity being taken out. We have that liquidity being taken out, and we have this I also being taken out. After taking out that I, we have this I as well being taken out, giving us to BOS, and we have this low being taken out, which is not a break of structure, rather hidden on mitigation. And after that, we have this as well being taken out. Now, we are having a retracement. We are having a retracement now. Back to the demand zone. This is the time frame demand zone, but for refinement, I consider this week zone instead. And you can see it is the same week as I expected. Okay, price did not even get to that FAG. Nice one. That's the plan. Okay. So now let me switch to 4 hours time frame. On 4 hours time frame, okay. So here, price is coming from a demand zone, which is on daily time frame. As you can see, this area is supply turn demand area, and that's exactly where price actually is created before we have this um break of structure here. And price has price hasn't mitigate this zone though, but it has already engineered a liquidity here. So, and we have this 4 hours demand zone, which is also valid taking out this liquidity as well. I'm going to go to like lower time frame to see what actually happened within that demand zone. If I can have, okay, 1 hour time frame. Okay, this is the last low. So we have that last low. Okay, after that last low, and this is the high of that last low. That's the high of that last low. So we have mitigation of the demand zone. So mitigation of supply zone there. So after that mitigation, this particular demand zone was created after that mitigation. I'll just pick it from here. But below it, there is an FUG. There is an FUG below it, which means there's still a zone below that particular area being marked. So as a result of that, we'll be looking for and be waiting for price to actually take out that particular low as the liquidity. So that's the low. For my own entry will be here on this. Without the need of waiting for a confirmation for me. So I will be taking the trade from here, waiting for price to actually take out this low as the liquidity because it failed to mitigate the demand zone below it. So this should be taken out as a liquidity and expecting a mitigation of the demand zone below it. So the first TP will be this equalize. That will be the first take profit for me. And let me go to how I was coming from. Since I have my buyers intact, the second TP will be this second I. That will be my second TP take profit. And my final target will be this particular I, which is going to give 36 hours. So that will be my final target. So it's going to be a swing trade. And let me mark out the TPs. TP1, TP2 and final targets above that. Now, even you can't using trend line, we can see we have this like just for us to have confidence. Using trend line, you can see series of touches 1, 2, 1, 2. So guy is coming back to that trend line and continue the journey. So this is basically the lesson I've learned that I learned in 2024, which I'm incorporating into my trading, trying to understand the bias from the higher time frame and follow the directional bias of the higher time frame. So at this being, I did not do this top-down analysis. There is higher tendency for me not to understood the directional bias of this particular play. So which might have affected my trading in short. So this is what I'm actually anticipating on odd JPY. So I hope with the little thing I've explained, you've learned one or two things, and it's going to help you to achieve more in your trading journey. Thanks for joining me today. Have a blessed and profitable day.